Hey guys, welcome back to Stacking Stocks as we go through Tesla's recent performance and try to figure out what investors should do with their Tesla stock. Now, Tesla is the biggest automaker in the world in terms of market capitalization. Indeed, its valuation is bigger than that of the next 8 automakers combined. The most important recent Tesla news is the company's earnings. In its quarterly earnings release, Tesla reported that 2021 was its best year. Its total revenue skyrocketed to more than $52 billion in 2021 from $31 billion. Its profitability also surged to more than $5 billion. This is notable since Tesla used to make substantial losses in the past few years. As the founder of Tesla, Elon Musk is the company's biggest shareholder. According to Bloomberg, while Musk has been selling his stake in Tesla, he owns about 175 million shares. That means that his stake is worth about 17.6%, bringing his total ownership to more than $105 billion. He also has billions of dollars in cash, which he made by selling his stock last year. Notably, he has an interest in SpaceX. Elon Musk's net worth is estimated to be over $234 billion, making him the wealthiest person globally. However, he's lost about $50 billion of his wealth this year alone, according to data compiled by Bloomberg. Tesla launched its initial public offering in 2010. When it went public, the Tesla stock price was trading at a split-adjusted rate of $5. Since then, the Tesla stock has jumped by more than 28,000%, making it one of the best performers in the market. While the long-term performance of the Tesla share has been good, the journey to the top has not been smooth. Now, with most of its capital expenditures already done, analysts expect that the company's profitability is going to keep rising over the years. But like we all know by now, things sometimes tend to deviate from what's expected. So the big question is, what should we expect from Tesla? Well, another important latest bit of Tesla news is that the company decided to recall about 54,000 cars because of a software glitch. The challenge is that the glitch could cause the cars to disobey traffic lights. However, the impact of this recall on the Tesla stock price is a bit limited. Investors can at the very least breathe a sigh of relief over that. Most of the time, such news could have a significant impact on the stock price. But for Tesla, it's a whole different picture. The automaker beat expectations during the final stretch of 2021 with double-digit revenue and gross margin growth. Elon Musk said that Tesla sales will comfortably grow above 50% in 2022 compared with last year despite supply chain problems thanks to their new factories starting up and current plants boosting output. Still, Tesla was fairly reserved about the year ahead, with some market watchers disappointed that the company failed to articulate plans for a lower-priced model. Without concrete plans for the year ahead, some analysts find themselves in the cautious camp and see headwinds forming to slow Tesla's momentum, and some of the analysts have openly shown their disappointment in the stock. While Bank of America analysts were also anticipating more details on the company's timeline in ramping up production for the company's Austin and Berlin facilities. The bank noted that little definitive guidance was provided other than the current status in both plants, which was disappointing. From the look of things, the January 26 earnings call didn't really reveal much to investors. In a nutshell, both analysts and investors expected much more from it. Meanwhile, Morgan Stanley pointed to the Berlin factory as a source of concern. The bank noted that while the details are still foggy, investors should prepare for the situation around Tesla's German factory to be potentially much more politically entangled than people realize today. The story of Giga Berlin is not just a Tesla growth story, it's a German labor and growth story. Morgan Stanley warned that Tesla factories have been running below capacity for several quarters because of supply chain issues. The automaker also said that it would not roll out new models such as the Cybertruck, Roadster, and Semi, all of which have missed their scheduled production dates. And that's not good for investors because it will take on-time deliveries and increase production to ensure high returns. Once they get Austin and Berlin off the ground, they'll have about 2 million units of capacity based on estimates, which from an investor's perspective is good news. That means competing with large foreign competitors such as Toyota, which in 2019 sold about 2.2 million vehicles for their Camry and RAV4 models. Well, Tesla is already competing with the big boys. While Tesla is an overvalued stock, there are reasons to believe it's a good investment. The company has a good market share in the fast-growing electric vehicle industry. While more companies are entering the scene, Tesla has maintained its market share. Tesla has several benefits that the other companies like Rivian, Lucid, and NIO lack. For starters, it has manufacturing plants in the most important markets in the industry. It has operations in China, US, and Germany. This means that it can develop and sell cars faster than most manufacturers, and the automaker also has the infrastructure needed to succeed in the EV industry. For instance, it has the biggest network of supercharger networks. Since range anxiety is real, having that network is highly important. Additionally, Tesla stock is a good buy because it's the only profitable company in the EV industry. Others, like Lucid and Rivian, have a long way to become profitable. Most importantly, Tesla has the most advanced software in the industry. For the past many years, Elon Musk has been working on Starlink project with the intention of providing internet to the remotest spaces on the Earth by a network of private satellites in orbit. It picked up pace in 2021, and Starlink now has more than 2,000 satellites to boost. This project can start to pay off in 2022 and can increase the profit margins considerably, which will provide a positive outlook for Tesla's forecast. There's also no doubt in the fact that Tesla has handled the chip shortage more efficiently than its rivals, giving them excellent results for 2021, and as analysts report, this issue will subside in 2022, giving Tesla yet another cushion to go aggressive in its production and deliveries, and we can witness the upgradation of guidance in every quarter's results and a positive Tesla forecast. Now, most analysts believe that Tesla is an overvalued company. However, most of them justify this valuation because of its market share, revenue and unit growth, and upcoming projects like the Semi and Cybertruck. But there is a likelihood that the shares will make a death cross in the coming months as worries about the Federal Reserve remain. If this happens, the next key support level to watch will be at the $790 level. A break below this level will open the possibility of it dropping to about $563. And with the current circumstances, the Russia-Ukraine conflict has had its toll on Tesla stock. Elon Musk lost a whopping $13.3 billion as Russia invaded Ukraine, taking his net worth to below $200 billion as the global markets plummeted. Musk was the second person after Amazon founder Jeff Bezos to reach the hallowed $200 billion mark. The Tesla CEO net worth was roughly $199 billion, while Bezos' net worth was around $176 billion, according to the Bloomberg Billionaires Index. And from what we already know, most of Elon Musk's wealth relies on Tesla stock. So if Elon Musk's wealth is plummeting, that can only mean one thing. Tesla stock is on a downward trajectory. Actually, Tesla's share price has since fallen to the $700 level, thus marking its lowest evaluation since August. And since the war erupted, this isn't the news investors wanted to hear right now. So it remains to be seen whether Tesla will be able to rebound from this following the Russia-Ukraine conflict. Hopefully, the war will end soon so that the investors can find a reason to be happy again. Let us know your thoughts about Tesla's current situation via the comments section. Remember to like, share, and subscribe. Stay safe, and we'll see you next time right here on Stacking Stocks.